Hello, welcome from Trend Signal, where we review the data and events of the week beginning the 16th of May. Last week, equities a bit sort of mixed in the UK, but US markets were certainly under the cosh following some moves on the US dollar, where the dollar strengthened somewhat, mainly down to some fairly decent retail sales and consumer sentiment data Friday, but the S&P off roughly half to 1.25%. The DAX was a small beneficiary, up 83 points, but the Nikkei was a standout stock market last week, up 305 points, or 1.9%, as the yen succumbed a little bit, losing about 1.5% versus the dollar, although the yen strength over the last 3 months is a bit of a mystery to some. Oil continued to recover, but I think equities are less interested in oil for now. I think they're more concerned about global growth worries and perhaps a stronger dollar. And despite the Dow falling nearly 200 points after the European markets shut on Friday, Far East markets and European markets are in a vaguely positive frame of mind. I say European markets, the ones that are open. It is actually a holiday in Central Europe on Monday. But other than that, as I say, the oil continued to rebound, with UK oil up a further 5.5% as US stocks posted what's a surprise drawdown of 3.4 million barrels against an expected increase of 0.1 million barrels. So equities continue to struggle to find some sort of traction. Brexit hangs over the UK and European markets, really. Arguments have been played out to death and getting fairly predictable and tedious, I guess, as each side of the campaign puts its stall on in various media. Also, a report in the FT presents clear evidence that investors are getting a little bit nervous about equities. Asset managers and investors pulling money from global equity funds at their fastest pace since 2011, which is extraordinary. Redemptions from stock funds have reached nearly 90 billion so far this year, and as I guess we're entering the more challenging period of the year for equities, May, sell in May and go away, although May is not quite so bad. June and July are more challenging, but it's not surprising that the trend is unlikely to be reversed anytime soon, especially as we approach the anniversary of last year's record highs. So let's have a look at the data and events this week. A look at our calendar from Forex Factory. As you can see, it's a holiday in Central Europe Monday. Curiously, well, not curiously, thankfully they have it on a beginning of the week rather than the midweek holidays, which tend to happen in early May. So data this week dominated really, I guess, by the FOMC meeting minutes. That's the Federal Open Market Committee meeting from a couple of weeks ago, and also a bit of inflation data. So let's just take a look at the first bit of information or data released this week, which will be the UK consumer price inflation, or perhaps some might call it deflation. Certainly not in the UK. At least that's not what's expected. Anyway, this is our inflation data. It reached its highest level since December 2014 last month. We're expected to achieve the same inflation rate this month. 0.5% is the forecast. I think despite this rise, it looks like the majority of economists don't expect a rate hike before mid next year, really. Again, perhaps we should be referring to this as the deflation number rather than inflation. And then we have in the afternoon on Tuesday the US Consumer Price Index, where we have seen a bit of a slowdown in core prices, but with the dollar not really doing what was expected at the beginning of the year, and with oil prices continuing to rally, and despite last Thursday's errant unemployment claims, there is a bit of a tightening in the labour market, and there is a concern that perhaps inflation may start to increase in the latter half of this year. Nevertheless, this time around we're looking at inflation figure of plus 0.4%, with the core prices plus 0.2%. Nothing to worry about just yet anyway. And then on to the main event, the Federal Open Market Committee. That's the rate setting committee from the Federal Reserve, the US Central Bank. It looks like, certainly from minutes from the last meeting. The chances for a rate hike in June dropped after that last meeting, but I think data has generally improved. We saw some decent numbers towards the end of last week, as I say, with the good retail sales and University of Michigan consumer sentiment data. And so the question is asked from some quarter whether the Fed might start to use the language of about a potential rate rise in June. Certainly, the markets don't think that's the case. Time will tell. 7 o'clock on Wednesday evening. Thursday, we have some retail sales here in the UK looking for a rebound from that rather bizarre negative -0.3 figure, expecting plus 0.7 here in the UK sterling markets. Beware or be on your guard. And then we have probably the most important manufacturing index data from one of the Federal Reserve districts, the Philadelphia region, with a lot of manufacturing, looking for a figure, good recovery from the previous month of plus 3.2. And then we have the unemployment claims, which might attract a little more interest of late, simply because the data this time last week was a surprise 294, 20,000 higher than what was expected. Economists always come out with some excuse. They do have an excuse, and let's see if it reverses this week. Then we have on Friday the start of a two-day G7 meeting in Japan, where global growth, or perhaps the lack of global growth, will be top of the agenda. And I think we'll also be talking about Brexit, which is obviously a worry to the UK, a worry to the European market as well, and actually perhaps to the global market, really. Should the UK leave, potentially could cause a breakup of Europe if they're not careful. And also a few wobbles in Greece as well, so plenty to talk about for the G7. That's it, a fairly lightish calendar, but that's it, all from Trend Signal. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.